In today's video, I'll reveal a simple yet effective trading strategy that I use on a daily basis to make consistent profits in the market. This strategy sets up every single day within the first 90 minutes of market open. It requires no bias or any fancy indicators and is completely rules based. I'm going to show you the full strategy along with a 3-step checklist on how you can execute this strategy. And then I'm going to show you real trading examples that'll help you in real time. So with that being said, let's get straight into the video. So as you can see right here, this is my last 30 days worth of P&L. I've made over $90,000 last month trading. If you look at my P&L graph here, you can see this is from August the 1st all the way to September the 1st. And I've made over $90,000 just in the last 30 days alone. And in today's video, I want to share with you the exact strategy and system that I use to be able to achieve these results. And I want to lay out the full foundation on exactly how you guys can do the same. Before we get into it, what I want to mention here is that I have a huge announcement coming soon. This is something that I've been working on for the past 6 months. I am going to reveal it to you here on September the 13th at 12 p.m. Eastern Standard Time. Not to give anything too much away, this is going to be an event where I'm going to teach you guys everything that I know about trading from scratch and how to become a profitable trader for absolutely free. So if you guys do want to join, the link is in the description below. You guys can sign up for priority access to get more updates on this announcement coming soon. So with that being said, in today's video, the goal of the video is to learn a simple and proven trading strategy that you guys can use to make consistent profits within the first 90 minutes of market open. And what is this strategy? So the strategy that I'm about to share with you guys is you'll learn one trading strategy that is repeatable. The best part is it doesn't require any daily bias, fancy indicators, and sets up every single day. And what this allows is that it takes the guesswork out of your trading. It's very mechanical and repeatable. It requires very minimal discretion. So you'll be able to see the setup fairly clearly and be able to execute on a day-to-day basis. And basically what this strategy consists of is 3 simple steps that we can use. We also have 2 different entry models. So I'm going to show you one entry model that I use on a daily basis. And then I'm going to show you a bonus entry model that we can use in specific market conditions. We'll then talk about entries, stops, and targets. And of course, at the end of the video, we'll go over some examples and then live trading to go along with those examples to show you guys exactly how I would execute this strategy in real time. So with that being said, let's go on to the strategy. So the first thing that we want to do is wait for New York Open, which is at 9:30 a.m. Eastern Standard Time. So every single morning, you want to come into the markets and identify the New York Open. This is, as I mentioned, specifically 9:30 a.m. Eastern Standard Time. So if you live in Central Time or you live across the world, so make sure you adjust your time for Eastern Standard Time. In this case, it's called the New York Open. You might be asking, why do I use the New York Open and not the London session or the Asia session? The reason why is because specifically when we're trading stocks and indices, the New York session is going to have the most volume and volatility. So whenever we have the most volume and volatility, this is when the trading strategy is going to work the best. So we're specifically going to choose the New York session, which is at 9:30 a.m. Eastern Standard Time, which is going to occur when the stock market opens. We can also look for the Asia session along with our London session. You guys can go back test this yourself. But in my personal experience, the best session to use this on is the New York session. And what we want to do now is focus on the first candle of a new market session. So in this case, we already have figured out the time that we're going to do this, which is the New York session open at 9:30 a.m. Eastern Standard Time. Now what we want to do is really focus on that first candle high and that first candle low. So once we have this first candle, we're going to mark out the high and low, and this is what we're going to focus on. The next question is going to be, what time frame do we use this? The 1, 5, or 15 minute? I've talked about each time frame in depth before and exactly when we should use each time frame. In this case today, we're specifically going to be focusing on the 5-minute candle. We're going to talk about when to use the 15-minute candle and also when to use the 1-minute candle later into the video. So make sure to stick around if you want to know when to use the 1 or 15-minute time frame. Next, what we want to do now is identify key levels on the 5-minute chart. So as you can see, we're on the 5-minute time frame. Markets have just opened here as well at 9:30 a.m. Eastern Standard Time. What we want to do is mark out the first candle high and the first candle low. So this is on a 5-minute chart. We have our high marked out and we have our low marked out. This is what's called our 5-minute opening range. And now what we can do is go on to the next step. Next, what we want to do is head on to the 1-minute time frame. So on the 5-minute chart, we marked out our 5-minute high and we also marked out our 5-minute low, as you can see here. But now we switched on to the 1-minute chart. So as you can see, we have 5 candles. If you count 1, 2, 3, 4, 5, we have 5 1-minute candles, which equates to 1 5-minute candle. And now we can go on to the next step. And the next step here is wait for a break above or below the 5-minute range. So as you can see right here, of our 5-minute high marked out along with our 5-minute low, what we want to do is wait for a candle close. We're also going to talk about different entries and if you want to wait for displacement, right? What is displacement and sometimes why we should wait for it. But in this specific criteria, we want to wait for a break above or a break below, which is indicated by a candle close above or below the range. So as you can see right here, we're on the 1-minute time frame, price pushes towards the downside, and now we have a candle close below our 5-minute range low. And now we can go on to the next step. And the next step is we can look for an entry off of our 5-minute range and look for continuation. So you can see we have our 5-minute high, 5-minute low. We break towards the downside. You can see price comes back up, retest, couple rejection candles here, confirmation candle as well. Now what we'll be looking for is entries off of our 5-minute range. We have our stops just to break above, and our targets are going to be a minimum 1 to 2 towards the downside. So once we get that break below, we're looking for strong price action to confirm our thesis towards the downside. And as for stops, just a break above, we're primarily looking for a 1 to 2 risk to reward ratio, which means we're looking to risk, for example, in this case, $100. We're looking for a minimum $200 reward. This is the easiest way to do it. Of course, you can use key levels and other things as well. The majority of our trades, we want to be looking for a minimum of 1 to 2. So as you can see, this is the classic 5-minute range strategy. This is a strategy that I've been using for a few years now. I personally have talked about it on YouTube for almost a year as well. This is a strategy that most of you guys should know how to use and how to execute it. This is something that I look for every single day if the market wants to present itself. But as you guys know, what happens if price doesn't retest? Because we'll see sometimes we have that 5-minute range set up, but price sometimes breaks above your 5-minute range. It never comes back to retest, but your overall thesis was correct, but you weren't able to capture the trade. So what do we want to do in this case, right? We talked about our break and retest strategy, which I personally use on a day-to-day basis. I've talked about the reversal strategy, which is another scenario, but now we'll talk about the third scenario, which is the breakout. So in this case, this is the exact same strategy, but it's just a different entry model. So what we want to do is wait for a break above the 5-minute range with displacement. So as you can see, we're on the 1-minute time frame here. We skipped over step number 1 because step number 1 is going to be the exact same. The difference in this case is number 2 and number 3, which is going to be the entry model. So as you can see right here, we have that break above your 5-minute range with displacement. And what's the easiest way to see displacement? It's in a form of a fair value gap, or what I call a bullish gap. It's this 3 candle sequence here. As you can see, what we have is our first candle high, and then we want to mark out the low of the third candle. If there is a gap in between our first candle high and our third candle low, this is the easiest way to show that there's potential displacement in a trade. And now what we want to be looking for is really continuation towards the upside. If it comes back and retests, that's great, but as you'll see, sometimes it doesn't always retest, and sometimes it just continues higher right off of the bat. So how can we enter in a trade based off of this entry model with displacement? So what we want to do is enter on a candle with displacement and look for continuation. So as you can see in this case, it's basically the exact same as our original entry model, but in this case, we're going to be a little bit more aggressive. When should you be a little bit more aggressive? Maybe if you have a higher time frame thesis, or maybe read the tape or read something that gives you a potential edge where you can expect continuation and maybe price doesn't want to retest. So what we want to do is mark out the 5-minute range high. You can see prices breaking above. We create displacement. Where do we want to get in? We want to get in when that third candle closes. So you can see we have our first candle, we have our second candle, and we have our third candle. Once we form a fair value gap, the third candle closes and it shows some strong price action. This is where we can get in on that third candle close. We can have our entries, we can have our stops at the similar spot here as our original break and retest, which is going to be underneath that 5-minute range. And what we're going to be looking for in this case is a minimum 1 to 2 risk for reward. And as always, what we're going to be doing is looking to risk, in this case, $100 to make minimum $200 for that 1 to 2 risk for reward. reward ratio. So this is the second entry model that we're going to be talking about and we can potentially use. There's pros and cons to this entry model since it is a little bit more aggressive, but you'll see sometimes if you do have a higher time frame thesis and you want to be a little bit more aggressive, this is the entry model that you can use. So this is going to be on the 5-minute opening range. When to use the 5-minute opening range is when we have a higher time frame thesis or we can expect a little bit more volatility just based off the market conditions. If we are ranging, then that's when I will prefer to use the 15-minute opening range. So if you guys want a full in-depth video on when to use each opening range candle and basically my full playbook, drop it in the comments below and I will make that video. So with this being said, now let's go on to examples that I have for us today and then go on to some trades that I took in real time. So as you can see right here, I'm on my first example. This is on Nvidia. This is where I made over $14,000 on this one for a net ROI of 84%. This ended up being a 5-minute opening range break towards the downside. I'm going to show you exactly how I was able to execute this trade. So first things first, as you can see right here, we have a clear downtrend on the overall market, right? We're going to come into the day with no bias, but in this case, we can lean a little bit more towards the downside if price wants to get underneath your previous day lows. So key levels that we're just going to have marked out is going to be your previous day lows, and we're just going to wait for that first kind of 5-minute opening range to develop. So as you can see right off the bat, price pushing towards the downside underneath your previous day lows. What we can do is now mark out your opening range high along with your opening range low. So now you can see we have our 5-minute opening range high marked out with our 5-minute opening range low. Now we can go on to the next step, which is going to the 1-minute chart. So now what we're going to be doing is looking for a break below or a break back above your opening range on the 5-minute time frame. Preferably, I'm going to be looking for trades lower just because we're underneath your previous day lows and we're showing a little bit of weakness coming to market open here as well. So as you can see right here, we're breaking underneath your 5-minute opening range low with a strong candle close underneath. What we can now be looking for is the retest off of our 5-minute range low for a continuation towards the downside. Now let's play out the tape. So as you can see right here on Nvidia, we're getting clear rejections off of our 5-minute range low. This is exactly where I'm going to go look in short with a stop just to break above. And in this case, I can target a 1-to-2 risk to reward ratio towards the downside. Now let's play out the tape. And you can see right there on Nvidia, we end up getting that 1-to-2 within 2 minutes after we looked to enter. Of course, we had really nice continuation towards the downside as well. I ended up holding this position all the way down and towards our next external levels. So of course, in this case, we're just making it nice and easy with a 1-to-2 fixed risk to reward ratio. But some of your best trades are going to come when we have continuation that's greater than a 1-to-2 risk to reward ratio, because sometimes it might only offer a 1-to-2, come back to break even. Sometimes it might be losers, but when you're going to make the most money is when we have continuation. If you guys want to see how I'm able to hold trailers or how I'm able to find these targets on the higher time frames, also comment down below in the description. This ended up being an 80% trade on my full position, and some of the contracts that I had ran over 200%. But now let's go on to the live session to see exactly how I executed this trade in real time.
Now keep an eye on Nvidia. I'm looking at the 172.5s here.
So as you can see right here on Nvidia, you can see that pop right off the bat, continue to show weakness underneath your previous day lows. QQQ rejecting off a key level here as well. What I'll be looking for is really the retest off of your 5-minute range for this continued push towards the downside.
Yeah, if AMD can have a weak reaction, or even Nvidia, once again, I like this a little bit better here now with the Qs. I'll be interested in the 172.5s.
So as you can see right here, I like Nvidia a lot better here now. You can see Qs break underneath your 5-minute range, retesting. Nvidia retesting once again off your 5-minute range low. Now what I'll be looking for is the 172.5 puts. If we can show some more weakness, which we basically got right here, now I'm looking for this continued push towards the downside.
Okay, Nvidia, I picked up some of the 172.5s here on Nvidia. My risk is going to now be a break above this 5-minute range.
So as you can see right there, I ended up picking up some of the 172.5s on Nvidia. Risk is a break above this 174, and now I'm looking for this continued push towards the downside. As you can see right here for Nvidia, we're having this really nice push towards the downside, 171, 170s and below as our targets. You can see Q's really nice push right off our 5-minute range here as well. And now you can see that spillage here on Nvidia. So as I sped up the tape here, you can see a really solid push down on the overall markets. And this is the power of being able to capture a trend. You can see 5-minute range retest perfect, scale down into weakness, another retest off of our 171.80s, another push back down and towards that 169. So this ended up being a beautiful example of trading the 5-minute opening range as our entry model, but then being able to trailer position and have a higher time frame thesis, which allowed us to capture this huge trade towards the downside. Now let's go into the next example that I have for us first day. So as you can see, we're on my second example here. This is on AMD. I ended up making over $19,000 on this trade. This was a 5-minute opening range retest towards the upside. It was actually primarily an earnings reversal. That's what was key here. But the entry model that I used was the 5-minute opening range. So in this case, I traded around 90 contracts over 120% net ROI because I ended up holding some trailers overnight as well. But this ended up being a super solid trade. Let's mark out key levels and go on to the lower time frames. So first things first, what I'm going to have marked out coming to market open is our previous day highs. That's going to be our key level, and we can drag this over. Now we can wait for that first 5-minute candle to develop. So you can see right off the bat, we're above our previous day highs. We have that first candle that's developed. Now what we can do is mark out our 5-minute candle high along with our 5-minute candle low. Once we've done this, now we can go on to the 1-minute time frame. So now we're on the 1-minute time frame. What we're going to be doing is looking for a break above or a break below in this case. In my opinion, what we want to do is look for a break above because we want to be looking for a continuation towards the upside. Let's play out the tape. So as you can see here on AMD, we had that pop. Now we're breaking above our opening range here on the 5-minute time frame. Now you can see prices coming to retest our 5-minute opening range high. This is exactly where I look to go in long. My stop in this case, I had a little bit of a wider stop because this was a higher time frame thesis. And now what I'm looking for is a fixed 1 to 2 risk reward ratio for a pushback towards the upside. Now we can have this drawing tool. We can drag this lower and we can play this out. And you can see right there on AMD, nice retest right off our 5-minute range high, super solid reaction. I actually ended up entering more just based off a higher time frame thesis, but this ended up being a super solid trade. Plus it had continuation. So you'll see majority of my trades that I take, they're either going to be small losers on the 5-minute range, or we're going to have really big continuations. And if you're able to capture these really big continuation moves when the markets are trending, this is when you're going to make majority of your money. Now let's go on to the live session to show you exactly how I executed this in real time.
Yeah, AMD looks really good. I was more focused on Apple, just measuring my position, but now on AMD, you can get that retest of your 5-minute high, 168.87. This one has a lot of room back towards the upside now.
So yeah, as you can see here for AMD, I wasn't able to get in that 167 because I had a position on Apple, but now we're breaking above your 5-minute range. What I'll be looking for is a retest off your 5-minute range for continuation towards the upside. The reason being is because AMD, higher time frame thesis, we also have earnings reversal. So this one looks really good for a continuation towards the upside.
Yeah, with the markets pulling back just a little bit here, the only name I'm somewhat interested in is AMD here on the 170s if buyers step in. Yeah, AMD, I took some of the 170s here on AMD. My risk is going to be a break underneath this 186. This one has a higher time frame thesis, and if we can show some strength here on the Qs, I think AMD does have room back towards the upside.
So as you can see right there, I just took some of the 170 calls off of your 168.80s, which is your 5-minute range, looking for a continuation towards the upside. My stop in this case is 168. I'm going to give it a little bit more room just because it has a higher time frame thesis.
Yeah, AMD actually added into more. My average on AMD on the 170s is 177.
As you can see there, I sped up the tape here. I actually averaged into my position here on AMD just because it's a higher time frame thesis, but super nice reaction. And now I'm looking for a continuation towards the upside. As I speed up the tape here, as you can see, beautiful reaction on AMD, really solid push towards the upside along with the Qs, right? Reversal off of low of day back up and towards high of day. So super solid trade on AMD. This was also a 5-minute range retest, but the main thing here was the earnings reversal and the higher time frame setup that we did have. But you can see another one where we're able to have a trending market, and this was a very solid setup. Plus I ended up holding some trailers overnight, which ended up making me even more money because we had some news in the overnight session. Now with this being said, let's hop on to the last example that I have for us today. All right, so we're on my final example here. This one is on Tesla. August the 1st, I ended up making over $8,000 on this one. Traded 70 contracts, net ROI was 48%, and this was also a 5-minute opening range retest towards the downside. Now let's go on to exactly what I was looking for coming to market open. So as you can see right here for Tesla, we're trending towards the downside. We're underneath your previous day lows. So we're going to do the exact same thing. Mark out your previous day lows, and now we can play out that first 5-minute candle. So as you can see right here, we have our first 5-minute candle played out. What we can do now is mark out our candle high, and we could also mark out our candle low. In this case, we're rejecting off our previous day highs, showing a little bit of weakness as well. Now let's go on to the 1-minute time frame. So we're now on the 1-minute time frame. What we like to see is either a break below or a break above. What I like to personally see, break below, just because we're underneath its previous day lows and we're showing a little bit of weakness with that pop and fade right off the bat. So let's play out the tape. So as you can see right here, we're now breaking underneath its 5-minute opening range low. Strong candle closure underneath. Now we're going to be looking for the retest for a continuation towards the downside. As you can see, price is now tapping back into our retest level, showing a little bit of weak price action here. This is where we can go look in short with a stop loss just to break above. Now we can be looking for a fix 1 to 2 for continuation towards the downside. Now let's play with the tape. And as you can see right there on Tesla, we end up having our super nice reaction off of our 5-minute range for this continue push down in towards low of day and below. And of course, in this case, we had some nice continuation down in towards that 298, which made it for a very nice trade on a Friday. So with that being said, let's go on to the live session to see exactly how I executed this trade in real time. All right, just to give us a little bit of context here on the Qs, we're underneath your pre-market lows, SPY in both the Qs, a little bit more bearish coming to market open. Tesla just rejected currently off of its previous day lows. I'm looking for continuation towards the downside on Tesla just because its previous day was weak. Now we're underneath your previous day lows. I either want to see a retest off of your previous day lows, or now it's going to be the break underneath your 5-minute range low for continuation lower. So as you can see here on NVIDIA, sped up the tape a little bit, but you can see rejection nicely here on the Qs off of your 557.50. Tesla now underneath your 5-minute range. What I want to see 5-minute range retest for continuation towards the downside.
Yeah, I took some of the 302.50s here on Tesla. Risk is going to be a break above your 5-minute range.
So as you can see right there on Tesla, I just mentioned I got in some of the 302.50 puts. Perfect rejection. As soon as it showed weakness, I got in right off your 303, which was your 5-minute range. And now you can see we're actually technically already down and towards low of day on that exact candle, but I'm looking for continuation towards the downside underneath now your 5-minute range low.
Q stalling here now, Tesla. Yeah, that was awesome. Right there, 300.
As you can see there, as I fast forward to the tape, super nice rejection off of that 5-minute range. Nice continuation down in towards that 300 key psych. I was scaling along the ways. As you can see there for Tesla, end up getting another flush here. Now the Qs is back into key levels of support. So Tesla, really nice push down in towards your 298. Ended up selling some more here and then ended up stopping at the rest of my contracts. But this was a super solid trade for a Friday. Perfect 5-minute range retest towards the downside. And that was absolutely beautiful. So with that being said, I hope you guys did enjoy the video. If you did, appreciate if you guys drop me a like and sub. Also, as I mentioned, if you guys do want to join the waitlist for the event coming up in a few weeks, you guys can do so in the description below. You guys can join the priority waitlist for some more information on that event soon. And with that being said, I hope you guys did enjoy that video and I will see you guys next week. Peace.